Technical analysis for the market indexes for January 18, 2021. What's up, everybody? This is Sang Win. And in this video, we're going to take a look at what is going on with all the indexes to see if they are going to move together or, they're going to be mixed, one go up, one go down. During this time, we are right in the middle of a political storm with all the presidential stuff, and it's highly uncertain. So if you were looking at the market and looking at different candles, it's not trending. When things are not trending either direction, that means things are iffy. Buyer are not strong and sellers are not strong. It's like a tug of war until we get a clear signal which direction the market wants to move. It is best to trade small or possibly avoid trading, at all. Most professionals and trend traders, they like to trade when the market is trending, and the trend traders, they got big money. Institutional traders and often hedge fund and mutual funds, they normally trend trade. Okay, so let's take a look at this. So let's answer this question. Why do we do analysis on the indexes? Because first, we need to check up on the health of the market. If the market is strong and healthy, it's going to go up. If the market is sick and weak, it tends to go down. The market is uncertain, it's going to go sideways or side trend. Once we get a sense of the health of the market, we can decide whether we should enter the market or exit the market, or decide our position. That helps us make money and avoid losing money. Okay, hedge fund managers, mutual fund managers, big commercial hedger, institutional traders, and many professional traders, they always do help check up on the indexes. So if they do it, we do it too. Okay. Excuse my voice. The weather has been cold, and it's not good for talking fast. And you guys know I like to talk fast. So let's take a look at this. This is the Dow Jones Index. As you can see right here, it made a sideways channel, saying that it's can't make up its mind. It doesn't want to trend up and doesn't want to trend down. In the past 3 days, made three red candles. It did go down a little bit, but a little support right here and it bounced up, so it went back into the channel. Okay. Basically, it's waiting to see how the presidential thing is going to turn out. And once it has a clear signal, it will trend toward the direction in which anticipate the economy is moving. Remember, the market moves in anticipation where the economy is going. Okay. Next, we're going to look at the S&P. Look, the S&P did the same thing. Moving sideways, sell down, bounce up a little bit, being close to this channel right here. As you can see, when you draw trend lines, it's subjective. Okay, there is no written in stone how you can draw a trend line. Okay, and it's all based on your experience. Different traders draw trend line differently. Okay, so but basically, it's going sideways right now. Doesn't want to go up, doesn't want to go down, can't make up its mind, unsure. Okay, let's take a look at the Nasdaq. As you know, we like to trade stocks that belongs to the Nasdaq. The majority of our trades are from technology stocks. Okay, take a look at this. See, same deal. The market is going sideways, making a sideways channel. Now, the thing with this going sideways is it can either break up to the upside and make a nice uptrend, or break down to the downside. So when something like this it's telling us, hey, do not take a giant position because of high uncertainty. Okay, so usually when the sideways like this, the algorithm worked the market pretty hard, and it pushed price up and down within this channel right here. Okay, let's look at my favorite index and see what's going on. Okay, so my favorite index, as you know, is the NDX. The NDX has, the top 100 leading technology company, right? And it has a roughly 90% correlation to the Nasdaq index. Um, as you can see here in the red two line, it made a nice wedge. Uh, when it got to this area right here, there was a big sell-off. Look at this gigantic red candle. It made a bounce, but there was a there was a big, gigantic sell-off, and many of the stock were beaten on that day. However, we got some good news about stimulus and all that kind of stuff, so the market went green a couple of days after that. But let's take a look at here. So this is the high. This is the high of the Nasdaq. I mean the NDX. Sorry, and the NDX is trading within a channel or is going sideways, just like all the three indexes. One thing you may know is the NDX made a lower high than the other two the other two previous indexes. Okay, the NDX is actually lagging behind for some reason. We are not sure at this time, but it's basically due to the platform that provides service for companies and people that works at home. Okay, now looking at these two red candle right here. Okay, basically this red candle has a little support within this trend line here that act as support. However, this support is pretty weak. Okay, um, the closing of the candle is actually near support. It's not in the upper half of the candle. So when it's closed near the lower half, it's kind of weak. When you see weakness, it tends to go down. Okay, just like this red candle right here. This red candle, it closed near the low, right? And closed near the lower trend line of the channel. Whenever we have a red candle that's a bit tall, lower prices often follow. So you want to take a look at that and be careful when you enter or exit a position. You want to be mindful that you want to trade with the trend. Now, when you are trading with the trend, you want to trade with the overall trend. However, you must be very alert of the mini trend or the counter trend within the bigger trend. Okay, because the counter trend can cause your position to be stop out or cause what is called paper loss. So as you all know, we are in the middle of the political storm, and I want you guys to pay attention to that. Okay, let's take a look at the last index, the IWM or the Russell 2000. Okay, now I always call this one a little brother. Uh, since my last update, I talked about Little Roy making a new high right here on this nice green candle, and they actually made a higher high after that. So the Russell Index is pretty strong. A lot of small cap has making nice uptrend. People portfolio that holds nice small cap, they see green and they see their portfolio going up. And however, during the last trading day, we form a little doji right here. The market is unsure which direction it wants to go, and it closed, near or at the open of that day. Um, Basically, all the indexes is actually waiting for this political storm to clear, to get a clear sense of, okay, is the economy going to be good? All the indexes is going to uptrend again, or the economy and things are going to be bad. and the market could be heading uh, in a downtrend. So one more time, anytime we are in highly uncertain time, it is best to trade small or don't trade at all if you are unsure. Okay, it is not wise to always be in the action, and it is not wise to always have money in the market. Now, when you are trading, you tend to always want your money to be working for you. This rush, this I would call it an addiction in some way. To have your feeling go up and down with the market, that's not good. We gotta tame that part of us, because everyone has this urge to have the money in the market all the time, and a lot of people, they want to have all their money in the market all the time. That's not very smart, because if the market gets down, a lot of long position is going to show red, and you're going to be in losing position. And often I find this: when the market gap down big, and many long position shows a big loss, traders and investors, instead of cutting the loss like they plan, they are willing to hold it for more losses. They want to hold it until it comes back. That's not smart. Uh, if you have a plan, you want to stick to your plan. If you have stop loss, you want to stick to your stop loss. Anytime you break away from your plan, your result, the results are often worse than you anticipated. Okay, so that summarizes what's going on in all the indexes. Um, it is basically going sideways, can't make up its mind, waiting for this political storm to be over. Once we have a clear signal which direction the market wants to go, if it's going to be heading uptrend, we're going to be taking long position. If it's starting to go downtrend, we're going to be taking short position. Okay, that is all. Thank you for watching. Until my next update, have a good one, guys.